Over the last 1 month, the market's taken a big nosedive downwards into the bear territory. Since its peak at 4765, the market's gone down to 3762, which is about a 20% drop from peak to trough. Now, is this the end, or is there more downwards momentum in store for the market? So let's find out looking at this technically. So in order to first analyze what's in store for the market, let's look at the monthly chart. So this is the S&P 500 futures that I have in front of you, and I am looking at the monthly chart for it. So in my version of the chart, it does tell me that the 50 period moving average line is at the 3579, and depending on who your provider is, it may kind of like switch between somewhere around the 3700 mark, the 3600 mark. So that's some discrepancy that I have noticed. So do tell me what it shows you. And this is the EMA that I have, the 50 period EMA that I have for my chart on TradingView. So let me know what you have. But in terms of the downward momentum that we are looking at, I do feel that there is a lot more downward momentum until it touches this particular line. So if the line is closer to say somewhere around here, this is where it would end, and then you would see a little bit of an upward momentum after that time frame. Now I just want to quickly point you towards NASDAQ. So I'm just going to type in NASDAQ here and just show you how NASDAQ has been performing. So I'm going to look at the NASDAQ futures and show you how does the NASDAQ compare in terms of the S&P 500. So let me just again go to, I've just opened up the NASDAQ mini, it's still the same. And let me look at the NASDAQ in Q1. Because yeah, so if you look at the NASDAQ here, you can see the 50 period moving average line, and it is close to touching it. It's not touched it yet. So if this is the line that's governing where the support is, that's where it'll head towards. But I have seen other trading platforms show me that it's already touched it. So keeping that aside, let's go back to our S&P 500 and I'll talk to you more about what's in store with it. So if this is the S&P 500, yes, it has been in a downward momentum for the past few weeks now. Now, if you look at the weekly chart, this is the weekly chart for the S&P 500. It did touch down towards the 3,700 mark. So now on a daily or a weekly time frame, it is moving around 100 units a day. That's the speed that it's trending towards in the downward direction. Now that's typical. The markets tend to go up slowly and fall down fast. You can see a lot of big red bars when it comes down in full steam. So that's what you are seeing right now. So there isn't a lot of positive pressure. So it's been like hovering around the 3759 mark. If I look at the intraday, which I'll do very soon, you'll see that it was hovering around the 3775 mark. So it seems to like hover around a certain mark and then just drop. And that's what we've been typically seeing. It'll hover around a certain mark and then drop. So this is the weekly chart as well. So I would pay close attention to where is the bottom. And when I say bottom, I mean where is the 200 period moving average line, and that's going to be the next support that you should look out for. If on your charting platform it is around say the 3600, that's where the market's going to head, and as soon as it touches your 200 period moving average line, it's going to start rebounding from there. Maybe intermittently, or it won't be like a complete reversal from there, but that's where you would see that the downward pressure has kind of exhausted. Now I'm going to move now to the daily chart, and as you can see, this was the range that I was talking to you about in my previous video, where the market was kind of hovering between the 50 period and the 20 period moving average line for a few days. This is the daily chart again, and it did touch the bottom, moved up, did touch the bottom, did move up, and it did go range bound for a while until it broke through the 20 period moving average line. So if you were an investor that was looking to short the market, I wouldn't say you were an investor, you would probably be a trader. A trader usually short the market. You would have shorted the market around here and then got some good gains all the way down. Now, the trouble in this approach is that you do not know where the bottom is. So the market did go down a few days, and now you can see it's kind of stagnated. It tried rebounding, and it's holding a base around here. Now, the market typically will never just free fall. It will start to head towards this 20 period moving average line. As you can see, it has touched it here and then fell again. It's touched it here, fell again, touched the 50 period moving line and then fell again. So that's what I do predict. If this is kind of like the intermittent base, it may touch it, or it may just go down a little more until the support, which is the 200 period moving average line in your weekly chart. It'll touch that, and then it may just like bounce again towards the 20 period moving average line. So that's what I feel may happen in the coming days, or just maybe in the next day or so. You may see a bounce back. This is the 4-hour time frame. You may see a bounce back towards the 20 period moving average line. It may happen either tomorrow. It may happen once the Fed gives some good news, if that's in store. If it's not something good that the Fed has to announce, you may see a further drop down. And where or how much do you see a further drop down? As I said, if I look into the weekly, it would be towards the 200 period moving average line. So that's where it will hold its ground. It won't just like slide through it, because it's a significant technical support indicator that a lot of big traders do follow as well. So keep that in mind while you decide on where you should go next. So if I was you, and if I wanted to trade for educational purposes, I'm not giving you guidance on when to buy and when to sell. I would look for the 200 period moving average line to probably decide on going long at that time and keep a tight stop loss. And if it goes up, if it rallies from there, you can capture some gains. If it falls down further, you have a stop loss to cover you. But if it breaks to the 200 period moving average line, whatever that is for your trading platform, then prepare to start selling again. So I do not feel that it will just free fall so much below the 200 period moving average line, knowing that it's such a important support. But you never know what the news can bring. Fundamentals do bring a lot of fear into the market, and that's what we're seeing with Bitcoin and a lot of other stocks and indexes around the world. So I hope that's useful and helpful to you. Do stay tuned for another video, and I hope and wish you all the best in your trading.